Morning, everyone, and I'm so honored that you're here with us this morning as we're starting our roundtable for a case for parametric insurance, flexi hurricane protection. At this time, I'm going to hand over to Richard Jones, officer in charge of CPDC, to do the welcoming remarks.
Good morning, everyone, and let me welcome you. I have a short PowerPoint that I will make a presentation. Okay, hope everyone can see this.
Yes, we could see it.
Great. So welcome to this morning's session. It is the fourth session in our dialogue on the issue of climate and disaster risk finance and insurance. CPDC believes it's an important issue for us in the region. We know that we are categorized as the second most vulnerable region in the world. And for those of us living in the region, I mean, we experience and see those annual impacts as well as other natural disaster, natural hazard issues that we confront as a region. Just a little background on CPDC, who we are. So we are a regional umbrella body. We're a coalition of NGOs, and we were established to work primarily in public policy and taking the voice of the average citizen into policy spaces in regional, international arenas. We tend to work with many organizations on the ground throughout the Caribbean, having consultations, engaging them, hearing their views, summarizing, analyzing, and articulating their views and positions in those policy arenas. So we have a mandate to impact on public policy. Our vision is putting people at the center of the Caribbean sustainable development. Hence why we spend so much of our time engaging with partners and stakeholders such as yourself to be able to shape our advocacy and our lobbying work. And our mission is to build civil society organizations, partnerships through engagement with governments, people, government, and other relevant partners. More or less to influence and the design and implementation of policies that empower us as a region. So our key program focus are governance and participation, capacity building, trade and economic development, liberalization, and sustainable development. Of course, governance and participation looks at the internal governance issues within us as a sector ourselves, as well as our relationship with policymakers. Capacity building is the institutional strengthening of our sector throughout the Caribbean. Of trade and economic development looks at the adverse impacts of many of the international trade agreements that we may have, and how they impact on poverty, how they impact on vulnerable groups, and what policies us within the region think are needed to strengthen the support provided directly to those most in need within these trade agreements. And sustainable development is the one that is relevant, I believe, for this morning's session. Gender, of course, is mainstream throughout all of CPDC's programs. In terms of sustainable development, the region's annual exposure to natural disasters, in particular hurricanes, is something that we all experience each year. From time to time, one of our islands may be impacted, but overall, we all share in living in a region where it's vulnerable to natural hazards and the impacts of climate change, which impacts our lives, our livelihoods, and our infrastructure as well at some stage. Collectively, this adversely impacts our ability to reduce poverty in a sustainable way. Much of our government's resources and household resources often would have to be reallocated to help in recovery efforts from these natural hazards. So it does have a continuous effect on our ability to be sustainable at the various levels. So we know that it's also impacting in terms of the SDGs, our ability to attain the priorities that have been set for us in the region by our Caribbean governments on the SDGs as well, given the constant adverse impacts, the constant level of debt. For example, our Caribbean governments must take on to address the hazards that visit and hit our region from year to year. So as part of this project, we're looking at resilience. What options do we have as a region that can assist and aid us in building our capacity to be resilient? This project, which we are partnering with many international partners across the globe, in particular with the Munich Climate Insurance Initiative, MCII, to help us explore the alternative financing mechanisms and ways that we can provide access to particularly vulnerable, as well as in general at the national level. How can we become more resilient, mitigate and recover faster from these natural hazards? That being said, I look forward to this morning session. I look forward to engaging and hearing more from Dominica as well in terms of our own perspectives on the issue and the global perspective as well. So thank you for being here, and I will hand over to Karen.
Thank you very much. And now we're going to hand over to Victoria from MCI, our partner, one of our partners on this project.
Yeah, thank you, Karen. I would just need to share my screen maybe. Great, thanks. Because I also...
You're on mute, Victoria.
All right, am I unmuted now?
Yes, we can hear you.
Great, thanks. Can you see my slides?
Yes, we could.
Okay, perfect. And thanks for the introduction, Karen, and also for the great overview that you gave, Richard. I'll try and be very brief. So my name is Victoria Seifert. I'm a manager for disaster risk finance and policy with the Munich Climate Insurance Initiative. And as Karen just mentioned, we are one of the partners in the multi-actor partnership endeavor that we're trying to achieve together with Cpdc and other partners. But very briefly on the Munich Climate Insurance Initiative, who are we and what do we do? We're a non-profit charitable association by German law and a think tank on climate change and insurance, launched in 2005 and currently hosted within the United Nations University for Environment and Human Security, with the mission basically to provide a forum for insurance-related expertise and to look at how insurance can ultimately, and in combination with other solutions, other risk management solutions, enhance the resilience of vulnerable people and of businesses, while keeping in mind, obviously, that insurance is a financial instrument as such, and other measures are needed as well to achieve those objectives. We are governed by an executive board that consists of members from academia, civil society, as well as the private sector. And we basically work out of a project office that, as I mentioned, is hosted in Bonn with the United Nations University. In terms of our organization, I'll keep it very brief just to give you an overview. MCI basically consists of three major divisions. The first one focusing on risk analytics, so basically modeling and valuation approaches to determine future losses, as well as the cost of future losses for vulnerable countries or regions of vulnerable countries, as well as identify the investment portfolio of adaptation options that countries or businesses or subnational governments can undertake, and how to link that cost effectively to insurance. That is the work of our analytics division, to really provide the metrics and the groundwork that is needed to make good decisions on disaster risk finance. Then we do have a division that focuses on implementation, our solutions and practice partnerships division, currently with ongoing implementation projects in the Pacific as well as in the Caribbean, working here together with CRIF SPC when it comes to the Caribbean. And then we have a third division focusing on policy, governance, and strategies, which is very much focusing on technical advisory towards the V20 group of ministers of finance, towards the InsuResilience Global Partnership, as well as monitoring the broader processes when it comes to the V20, G20, UNFCCC negotiations, and so on and so forth. And just a quick map giving you an overview of the countries that we are active in. But what I want to really talk about is the multi-actor partnership program, which is the reason for why MCI is here today. So we, MCI, are working together with, for example, Cpdc, but also several other civil society organizations, as well as academia across the globe, specifically from the African and the Asian region, to very essentially equip all of us with a better understanding of what is needed in the context of disaster risk finance, and to make the global supply of disaster risk finance solutions more demand driven, ultimately, by bringing in or trying to really bring in voices from the ground, from the regions that are affected the most, into global debates, into product design processes, to make sure that the ultimate solutions that come out of this are needs responsive and cost effective. And I'm very much looking forward to the presentations later here today. Now, why do we need a multi-actor partnership on disaster risk finance? Disaster risk finance sounds technical at first, insurance sounds technical at first, but when we talk about disaster risk finance, what we are talking about is basically an issue that isn't only technical, that isn't only a finance issue, but that is requires a social debate, basically, in essence, because we are looking at questions of intergenerational justice. When it comes to climate change, we're looking at questions of who owns the risk amongst us in society, who is supposed to pay for it, also given the fact that it's often the most vulnerable that are affected the most. And then in the end, also who decides. And for that, we need a very broad dialogue amongst the private sector, amongst governments, amongst academia, and most importantly, amongst those people that are affected and who are at the moment best represented or aggregated by civil society organizations, such as, for example, Cpdc and Cpdc's membership. And if we look very shortly sort of on what CSO engagement in the context of disaster risk finance could mean in practice, if we look at the national level, for one, what's very important, right, is to enable or facilitate this multi-stakeholder engagement as a starting point, which is exactly what Cpdc, for example, is doing here today, but to also provide the local perspectives and ground truthing to the solutions or the insurance instruments that are being offered. Are they working? Are they not working? Why aren't they working? What can we do better? And to also enhance transparency, right, when it comes to what the private sector may be doing, what we may be doing, and what governments may be doing with regards to risk financing, and hold those providers or actors accountable as well. I mean, that's sort of the traditional role of CSOs, if you want. And then lastly, CSO engagement at the international level. This links back to what I tried to touch upon from the start. For one, the maps, the way that we are working on it in the current context is to also try and, in the end, or ultimately build consortia or identify consortia and partnerships relevant for implementation, to enable regional and international learning, which also today is an example for, and obviously also unlock access to the InsuResilience implementation architecture. And I should briefly mention that InsuResilience is a global partnership aimed or dedicated to enhancing disaster risk finance solutions for 500 million vulnerable people by 2025. And I'm sure Karen may say a few words on that. And that partnership comes with a financing architecture that may also be of interest to some actors that we are trying to engage in this multi-actor partnership going forward. And with that, I would stop here, Karen, and thank you for giving me the time, and hand back to you.
Thank you very much for that overview. And I am also going to go into continue what you were presenting on, focusing on the Caribbean aspect. So as Victoria said, that the project is being implemented by 7 partners across the world, but in the Caribbean, we are looking at using 3 countries, Antigua and Barbuda, Grenada, and Barbados. However, all our virtual consultations and our maps are open to the entire region. I want to thank our focal points in Antigua, being Volunteers United, in Grenada, Interagency Development Organizations, and in Barbados, the Association of the Non-Governmental Organizations. We talked about the aim of the maps, which is to reduce the negative impacts of disaster and climate change on vulnerable groups in select developing countries through the use of poverty-oriented and human rights-based climate disaster risk measures in context of InsuResilience Global Partnership. For the Caribbean, we have a few main project activities, including the creation of the Caribbean maps, which will go into the global maps. Also, policy magazines, sustainable development, and equal protection out that you could find on our websites. As well, we have 2 research papers, gender and parametric insurance, which was discussed at our last roundtable, and then CRFI and CSME, which is going to be our next upcoming roundtable. And we also have research on the hucksters in Grenada and parametric insurance coming up shortly. We also have a social media campaign, and we also have these virtual consultations that we call the roundtable and educational awareness articles. So these are just a glimpse of what we've been doing as we try to achieve sustainable development for the Caribbean. If you're interested in becoming a member of the MAPS chapter, you could find the link on our website, and there's also the link for the signatory sheet. You could also find it in our chat, and we will email it as well. At this time, we're going to hand over to, We're going to hand over to Brent. Brent Barnard is the economic growth leader of the Caribbean Resilience. Sorry, 1 minute. I have my documents are refreshing for some reason. Thank you for your patience with me. Brent Barnard is the economic growth lead at the Climate Resilience Execution Agency at Dominica. CREED is focused on building a resilient Dominica, and his role as economic growth lead. Brent is focused on building the climate resilient economy. Brent joined CREED after a 25-year career in management consulting with a focus on finance, technology, operation, and strategic sourcing of technology companies, financial services firms, and central government clients. Brent has worked across US and Europe and Middle East and Africa, and he holds an MBA from Duke University in North Carolina in the US. Thank you so much, Brent, for being here with us today, and the floor is yours.
Great, thank you very much. I'm just launching the meeting on my phone as well so that I can share the product with everyone when we get to that point in the discussion. But thank you very much for including us in this discussion and for the opportunity to talk about parametric insurance and the work that we're doing here in Dominica. Let me just first of all give you, let me make sure that this is muted. Great. And by the way, Karen, I've dialed in separately to a different device. So when it comes to that, if you can allow me both of the versions of me to share so that I can share from my phone, I'll be able to show everyone what the product looks like.
Okay, great. And one quick, could you define parametric insurance at the beginning before we go
Sure.
in? We could
Yep,
all
sure.
ensure that we're on the same page.
Sure. So I'll come on to that. First of all, let me give a bit of overview of CREED as an organization and what we do and how parametric insurance fits into our overall mandate. So CREED is the Climate Resilience Execution Agency for Dominica. We are mandated by an act of parliament in Dominica to help Dominica achieve climate resilience. As a country that's seriously impacted by climate change and recurring storms, the ability to achieve resilience is really an existential requirement for the country. My role as economic growth lead is to focus on building economic resilience. And we really see that in three primary ways. First of all, it means risk management. It means effective risk management across the economy. So that's really what we're here to talk about today. We also look at economic resilience in the context of sector development and diversification. So in order to have a resilient economy, you have to have an economy that's functioning across a number of different sectors. So you need agriculture, you need tourism, you need manufacturing, you need to see what you can do to develop the knowledge economy. And by having a broad and diverse sectoral base in the economy, you improve the resilience within the economy. The third area that we've been focusing on is access to finance. And this means that businesses can borrow ex ante an event as well as ex post an event, so that in the wake of a disaster, lending institutions continue to provide access to businesses when they need it. So this is really something that we consider quite important. And we've looked at a number of different initiatives where we can help businesses ensure that they have continuous access to the financing that they need for healthy economic growth, as well as for recovery from natural disasters. So coming back to the first point that I mentioned, we talked about risk management. So when we say risk management, what we mean is the ability for the economy at the macro level, as well as the micro level, to manage risks effectively. And we've looking at historical data. So for instance, looking at Hurricane Maria, in the wake of Hurricane Maria, only 14% of assets in the country were certified, were insured. So that means that the protection gap was 86%. So anything that we can do to try and narrow the protection gap is really essential. So that's been something that we've really we focused on extensively. Sorry, 1 second. Apologies. So we've looked at what we can do to have interventions that will help expand access to insurance. One of those key things has been launching a parametric insurance product. So traditional insurance has an essential role to play in the market, and is asset-based, asset-linked insurance is really fundamentally important. However, asset-based insurance alone will not close the protection gap, will not get us to the point where we have reduced that 86% of uncovered assets down in any significant way. So we looked at what we can do to expand parametric insurance as an offering to the micro level. When we say parametric insurance, for the purposes of this project, what we mean is event-based insurance. So rather than asset-linked insurance, what we mean is event-linked insurance. Now, there are other products that are available in the market, and parametric insurance can mean different things. It can also mean access. It can also mean a blended sort of series of measures. In the case of the parametric product that we've launched, we specifically have chosen only event-based insurance. So I guess I can now let me talk a little bit about the project that we've launched and the objectives that we really wanted to achieve. Let me start off by sharing with you a short video that we developed that explains the product. Where did that window go? Where did it go? I seem to have lost. All right. So apologies, I seem to have lost the ability to share the video file. 1 second, let me see if it comes back.
Just 1 minute.
You can just share it straight from YouTube.
Yeah, let me do that. Okay, let me go to YouTube and do it from there. Thank you for that, Phoenix.
Yeah, so YouTube and then share screen and pull up the YouTube in
For some reason it's not giving me the ability to share the video app. So, all right.
Resilience is the responsibility of us all. That means planning in the event of.
Okay. So let me share now this. All right.
Good, and then put it in full screen. Good, nice.
Building resilience is the responsibility of us all. That means planning in the event of more frequent and intense storms. Introducing a new product called Flexible Hurricane Protection FHP. FHP provides protection against tropical storms through to Category 5 hurricanes. If a storm covered by your policy impacts Dominica, you get a payout automatically. No assessors, no adjusters. Pick the amount of coverage you need. Use the funds however you want to cover lost income, replace damaged equipment or crops, rebuild your business, or carry out quick repairs to your home. Just pick the amount of coverage you need or select an annual premium that fits your budget. Make FHP a key part of your 2021 hurricane plan.
Great, so that gives you an overview and an understanding of how the product works at a very high level. The idea was that we wanted to develop a parametric product that would be, that would be easy for individuals to understand, and that would be delivered entirely via a digital platform. So this was one of the things that was an innovation that we developed, which was that basically the entire delivery channel for the product has been through the mobile phone. So I'm going to now walk you through the product and show you what that looks like. So I'm going to share. Okay. And once again, it's not giving me the option to share the application that I want to share. All right, let me 1 second. Apologies, if you'll just bear with me 1 second, I'll get there.
Are you sharing from your desktop or from the mobile? Okay.
And from my phone.
Okay.
And it wasn't giving me the option of sharing the specific app. All right, great. So FHP we developed it with a grant from Compete Caribbean and the Inter-American Development Bank. They sponsored a competition focused on developing blockchain-based solutions. So we developed we leveraged an existing blockchain authentication engine, which allows for the delivery of smart contracts and allows for a hyper-secure mechanism for delivering a financial product. So the ability to actually deliver a financial services product entirely through the mobile phone really necessitates having a very resilient, very secure platform. So we've used blockchain for the development of the product and for the sale of the product. So let me now walk you through what the customer journey. Okay. Oh dear. Well, apparently it's not going to allow me to access the app. Apologies for this. I have another option. I can show you what the journey looks like. Okay, 1 second. Okay. All right, great. So again, as I mentioned, FHP is delivered entirely via a digital platform. And because it's a new class of financial products, because parametric product is new at the retail level, and because we're selling this directly to consumers who might be considered not particularly well versed in the complexities of things like parametric insurance. So we wanted to make sure that everyone really understands what event-based insurance means. This is a pilot project, and for us, the most important thing as part of the pilot was to make sure that when people buy the product, they're really quite clear on what it is exactly they're buying. We wanted to make it absolutely explicit that they understand the way that parametric insurance works. So the difference between event-based and traditional asset-linked insurance was essential for us. So as individuals access the product, we give them pretty detailed explanations about how it actually works. Again, this is it's a mobile app, so it's an app that's delivered entirely through your phone. So all of the navigation and access to all of the different functions you're basically looking at the screen mock-ups here. Since unfortunately I can't actually show you on my mobile phone. So as individuals go to select the policy, in effect, what we wanted to make sure is, first of all, understand how parametric insurance works and how FHP works. So we provided detailed descriptions on parametric insurance, how the measures are assessed, how payouts occur, how you use the app. So we tried to provide as much information as we could to individuals as they were going through the process of trying to understand this new class of financial product. So again, this is just walking you through all of the information. So the next thing, the next section of the app is understanding the policy options. So again, and when Dan Bierenbaum speaks about Global Parametrics and the work that they do, I'm sure he'll go into more detail about their cat in a box product. But this is basically built around Global Parametrics cat in a box, which means that we're looking at two primary measures. We're looking at storm strength, which is a measure of wind speed, and we're looking at proximity of the eye of the storm to the shoreline of Dominica. So those are the two main measures that we're looking at, the two parameters that we're assessing. So that means that we have tropical storms, categories 1, 2, 3, 4, and 5 hurricanes. And then in terms of defining the proximity of the shore, we define 2 boxes. So the first box is 25 kilometers from the shoreline. The second box is 100 kilometers from the shoreline. Tropical storms through category 3 hurricanes must pass through box 1. So they must be within 25 kilometers of the shoreline. Categories 4 and 5 must pass within box 2, which means 100 kilometers from the shoreline. So the stronger storms can pass further away and trigger a payout. In addition to those 2 parameters, there's a tiered payout structure. So tropical storms pay out 10% of the full coverage amount. Category 1 storms pay out 25%. Category 2 storms pay out 35%. Category 3 and 4 pay out 50%, and then category 5 storms pay out 100% of the coverage amount. So there's a tiered payout structure associated with the policies, and we designed the policies basically to be aligned against the storm strengths. Because of all the complexities associated with delivering via a mobile phone, so it's new for people to be buying financial service products through mobile phone, and the newness of parametric insurance, we wanted to try and keep the policies as simple as possible. So the policy options are T through 5, T for tropical storm, and then 1 through 5 for each of the categories of storm. So basically, when you buy a policy, you're buying for that equivalent storm in every storm of greater strength. So if you buy policy option T, you're covered through T through 5. That's the most comprehensive option. If you buy policy option 5, you're covered only for category 5 hurricanes. In addition to these policy options, one of the things that we discovered in the focus groups that we had early on was that individuals really want the ability to buy their policies not only based on coverage amount, but also based on affordability. So with traditional asset-linked insurance, individuals can only buy the insurance that the insurance company tells them to purchase. If your house is worth $200,000, you have to have something approximating $200,000 in insurance to cover the value of the asset. And they tell you what the premium is. In the case of event-based insurance, one of the key benefits is the flexibility that comes along with being able to say, actually, I want to be able to protect my income, which comes from a variety of sources. It comes from some agricultural holdings. It comes from a small business that I have. And so individuals need to be able to think somewhat differently about the way that they assess their risk and the way that they then plan for that risk. So that was one of the real benefits of this product. The next benefit associated with that is that, so maybe you determine that you have vulnerability in terms of agricultural holdings, you have vulnerability in terms of income, you run a small guest house on your land, but you can't afford all of the coverage that you might like to have. So you say you can afford $100 a month in premiums. What can you get in terms of coverage? So that by allowing people to select the coverage that they want based on how much they can afford, it then gives them the ability to say, well, I'd like to have the full $200,000 in coverage, but I can only afford $150,000. So let me think about the events that I perceive to be a greater threat. So that allowed people to think through then the storm strengths that they're particularly worried about. Now, one of the issues, of course, that has come up is this is being a product that's linked to storm strength. It's a wind speed product, which means that we're not measuring rainfall. That doesn't mean that if you receive damage from rainfall, you don't receive a payout. It just means that we're not measuring rainfall as part of the delivery of the product. In a place like Dominica, where damage can come from rainfall more frequently, perhaps, than from wind speed, that's potentially an issue. So it was important for us that people really did understand the thing that's being measured so that they can think very carefully about their risk and the way that they approach the risk and the way that they make their policy selections. So again, you make your selection by coverage amount or by the amount that you can afford. And then I think this is pretty much, this gets us to the end of the the policy option. So then once you make your selection, and then you go through the process of confirming what you've chosen, validating that you understand exactly what you've selected. And then we did ask individuals, we asked some questions about how exactly people will be using what they intend to use the proceeds for. This is primarily for our information, because in subsequent years, it's possible that we'll want to refine the product to be more specific, for instance, for agriculture. Interestingly, as we were having focus groups and as we were in communities talking to people, the vast majority of people who are interested in the product were interested in using it for agricultural holdings, because there are no options at the moment for agricultural insurance at all in Dominica. So this is the only thing that's available to farmers who are interested in protecting crops, land, equipment, and the agricultural holdings that they might have. So at this point, I'll stop sharing, and I'll just give you a few of the kind of the things that we've observed as we've been through the product, and then I'll be done. But as we went through the sales period, so we achieved approval from the regulator to start selling the product in mid-April, which gave us about a month to sell. So we held a series of focus groups, engaged with community groups in the 2 pilot locations where we're selling the product, in Grand Bay in the south of Dominica, and then on the west coast in Salisbury. So those 2 communities are heavily agricultural, and by and large, the people who expressed an interest were people with agricultural holdings. And we got some quite interesting approaches in terms of how people thought about the policy and how they made their selections. For instance, we had individuals who selected one level of coverage for agricultural holdings, where they opted to have the comprehensive level of coverage, so policy option T. But then for a small business, they chose a policy option 3, which provides coverage for categories 3, 4, and 5 storms. So people were making actually quite complex, sophisticated risk assessment measures when they decided what policies they wanted, which we thought was really interesting and encouraging, that people were really able to think about this in quite sophisticated ways. Another example of that would be an individual who made 2 different policy selections, one for agricultural holdings, and again, chose the comprehensive option. And then for greenhouses that he built on the property, he bought policy option 4, so policy option covering for protection for 4 and 5, because the greenhouses that he bought, he'd been told would withstand up to a category 3 storm. So he felt like he wanted protection for those greenhouses specifically for 4 and 5. Again, it's not asset linked. It's not asset linked insurance, and people do get that, but they buy the protection with specific events in mind and trying to cover for particular risks that they perceive. So that was really encouraging for us to see that people were going through a fairly sophisticated risk analysis process in making their policy choices. One final comment, we did see that by far, most people, I expected to see kind of a standard distribution of policy choices, policy option selections, where a few people on either extreme, a few people buying policy option T, a few people buying policy option 5, and the most people buying a distribution in the middle. In fact, what we saw was that by and large, people bought the comprehensive policy option T, which is the most expensive. And I think there were a number of reasons for that. People perceive that wide range of events is really what's going to happen. They like the fact that there are multiple payouts over the course of a season. So if there are a number of different tropical storms, or if there are a mix of storms over the course of the season, that range, the multiple payout options was very appealing to people. So again, that was something that was not what we expected to see, and was quite surprising to see that people were choosing the comprehensive option, the most expensive option, for the full range of events. So I'll leave it at that and hand back over to Karen. I'm sure that there'll be questions. I hope that that was clear. Apologies for the technical difficulties and for things not working quite like I thought that they were going to, but hopefully you got a good sense of how the product works. Thank you.
Definitely, and thank you for walking us through from the creation of the project, what is parametric insurance and the different product that you offer and what you found so far. I'm just going to open up the floor for 1 or 2 questions before we move on to the second presentation. You could use the raise your hand option, or there is a question in the chat. Seeing that people are showing interest is mainly in the agriculture sector, does that mean that the policy will be extending to the fishing sector as well?
Well, again, so the product is open. The pilot was open only to the 2 locations, to the two regions. I don't know specifically that there were any fisher persons who bought the product. Certainly they could have. Since it's not asset linked, anyone can buy a policy for any purpose whatsoever. We had people who own hotels who bought the product, agricultural people, small business people who bought the product. There may have been some fisher folk who bought, but I'm not entirely clear. But they could have. So there's no reason that someone who is involved in fishing could not have bought the product. That's again, since it's not asset linked, there's no sort of criteria or restrictions in terms of how you can use the proceeds from a payout. So yes, it's currently open to fisher folk. Now, I think the thing that's relevant is how the product, the specific measures that are in place. So, wind speed, storm strength is a bit of a blunt instrument. It's really incredibly imprecise. And damages are a result of a variety of events, a confluence of events. So we're not really allowing for that or measuring for that. So, and again, I think a product that's specifically targeted at fisher folk will probably need to be a little bit more nuanced in terms of the measures that are taken into consideration. And there are products that are currently available. CRIF has a coast product. There are other products that I'm sure will be coming along that look at the needs and the threats and the perils that fisher folk specifically face. This product could have been used. We didn't say this is only available for people with agricultural holdings. So it could have been used by fisher folk.
Okay, thank you. And then there is another question. Can you explain how the blockchain is being used?
I can try. Again, I'm not the technology expert, but I can give you the broad overview. So the blockchain is used to do a number of different things. First of all, it's the authentication engine. So when you create an account, it authenticates you and creates an identity for you that is then linked to your policy. The blockchain also administers the contract itself. So there's an API between the blockchain platform and Global Parametrics, which functions as, in the language of Parametric Insurance, as the trusted oracle. And so the blockchain platform is receiving weather information and triggering data on the specific parameters. So in the event that a parameter is triggered, or both that the parameters associated with policies are triggered, the blockchain records that event as having triggered the policy, and then would record any payouts that occur. So we're using the blockchain as that distributed ledger technology, in theory, to be very secure, unhackable. If you think about all of the things that are happening now with these ransomware attacks, this should be protected against that kind of an event with the distributed nature of blockchain. So in short, we're using it for authentication and for smart contract administration, I guess is the short answer.
All right, thank you. And we're going to go to Dirk, and Ezekiel will table your question for the next question and answer time. Dirk, you had the question?
Yes, thank you for giving me the floor. Brent, I'm working in the climate risk adaptation and insurance project in the Caribbean with MCII. I'm the insurance advisor, so we are in a similar field of action. We have the same problems, I would say, to bring it to the ground. How have you managed the regulated type of your business? What are the business partners, the distribution channels? How have you got regulation? Who are the insurers? Who are the reinsurers? Who is the business part of your business? Thank you.
Right. Those are great questions. So I guess the three questions that you raised there. So the business side of the product, the regulatory side of the product, and the underwriter side of the product. So the business side of the product is simple. Again, this was a pilot. It came about as a result of a competition that we entered into through Compete Caribbean. We were awarded a grant. We partnered with a technology company called Diagon, which is based in Trinidad and Tobago. They're a specialist technology company looking at sort of emerging technologies to be implemented in the Caribbean region specifically. So they were the technology partner. So it's really a bit of we've stitched together a little bit of pieces from here and there. There isn't really a business as it were that sits behind this. So we've kind of pulled together bits and pieces for the purposes of the pilot. In terms of the reinsurer and the underwriting, Dan Bierenbaum will speak to that momentarily, but we were supported by Global Parametrics, who developed the risk product and provided the risk capital from their natural disaster fund. So that's where the reinsurance came from. He'll speak to that again in a moment. And then the regulator, and that's something I can speak to in a bit more detail. And this is something where there was quite a lot of work that went into this. So we started engaging with the regulator pretty much straight away, where we talked about the fact that we wanted to try and pilot a parametric insurance product that would be sold directly to consumers. Now, there are a couple of things that go along with that. First of all, you need a regulated entity that's selling the product. And then you need to be able to clarify that in actual fact, this is not an insurance product. It's actually a derivative product. So we're actually selling a financial product that acts like an insurance, but is actually a derivatives contract. So that meant ensuring that, first of all, there is no restrictions, as in the US, against selling derivative products directly to what are classified as unsophisticated investors, which has a very specific definition in the US. There are no similar restrictions in Dominica or in the ECCU. So the ECCB does not regulate against selling derivatives contracts directly to retail consumers. So that's that issue set aside. Then the next issue was the licensed entity. And we were, rather than actually selling through a licensed entity, we were granted an exemption by the regulator to sell this product through our other partner, which is the Dominica Co-operative Societies League Limited, which acts as the umbrella organization over all credit unions in the region. Mr. Phoenix Belfield is on the call as well, and he'll be speaking in a moment. But they were our delivery partner and our go-to-market partner. So they were the ones who functioned as our channel for delivery and selling to consumers. And they were granted an exemption to sell this product as part of the pilot. So going forward, the view is, having now achieved this first pilot, we will do a lessons learned and a drains up with the regulator, understand what worked well, how they felt about this product being used by retail consumers as a risk management solution, and then take it from there for approvals for a wider rollout and wider distribution of the product. So I hope that answers your question.
Can I add a question?
No, sorry, in the interest of time, because we have two other presenters. So we'll just have to ask you to wait until we reach the other question.
If you'll put the question in the chat, I'll try and address it separately.
Yeah, that could also wait. So now we're going to hand over to Dan. Dan is the co-founder and vice president of Global Parametric, heading up their Washington, D.C. office. He plays a leading role within the company's product design and structuring activities for clients. Dan brings over 10 years of experience working in financial services in low and middle income countries to catalyze economic growth through foreign investment and development of local financial markets infrastructure. Dan has a master's from the Columbia University of International and Public Affairs and a bachelor's in physics from the Duke University. Dan, over to you.
Thank you, Karen. And thanks everyone else that proceeded. I will, share a presentation here. So global parametrics, I wanna address who we are first. I think it's important to just get a little bit of context on what global parametrics is and why we exist, and then I'll talk through a bit about how we approached this opportunity that with partnering with Creed and the Dominica Co-operative Societies League in bringing this product to market, and then a bit about sort of what we learned from it and why we thought it was a compelling opportunity, and also give a little bit more context of other solutions that we've implemented that might have relevance to this discussion around, you know, bringing protection to vulnerable communities. So just I mean, I think many on this call probably are familiar with the concept of the disaster protection gap, and that's really what motivated the creation of Global Parametrics. So about 5 years ago now. We are a for-profit company, but we have a social mandate and have backing from the British government and German government via the InsuResilience Investment Fund, and also are working alongside Hanover Re with some as far as capacity support for transactions that we do. But essentially, you know, you see the numbers here. You know, the vast majority of losses in low and middle income countries, you know, have little to no protection against for natural catastrophes, and so that's a big part of what we're trying to address with Global Parametrics, and our company, as one might guess from the name, we only do parametric protection. So, you know, I'll add a little bit more to, you know, Brent's explanation as to parametric versus sort of all the alternatives, but you know, parametric isn't the only option by any means. It's one of many tools, but it's an area of focus for our company as we see it as an important tool to reaching markets that have so far been underserved with insurance solutions. The company has a couple elements to it. So Global Parametrics is an entity that has sort of a risk underwriting platform, has products. These we have the ability to design our own products for various natural catastrophe risks. I'll get into that in a second. But we also, in order to seed the market for protection, we also have a vehicle that Brent mentioned called the Natural Disaster Fund, which too has been backed by the British and German government, and that's where Hanover Re's role sits. So you have Global Parametrics manages this vehicle called the Natural Disaster Fund, and ultimately that entity acts like a reinsurance entity in the market, and we have about $100 million of sort of capacity to provide protection to entities, you know, institutions, NGOs, businesses. We don't, from this vehicle, provide direct solutions to retail clients, but certainly work with other partners, like in this case, the League of Credit Unions in Dominica, to provide backing for their solution to individuals. So ultimately, you know, most of the products that Global Parametrics develops for our clients are actually issued by the vehicle, the Natural Disaster Fund. So this is just a quick overview of, you know, the opportunity set, just to give you an idea that, you know, there's more than tropical cyclone products out there. You know, we as do other parametric providers, we have agricultural products for drought. We have sort of temperature, extreme weather extremes, you know, extreme rainfall. We have a flood products and earthquake products, and some sort of more innovative efforts around, you know, forecast-based solutions and even volcano products that are more under development. But I think you know, these are all again built as parametric indices, meaning that the protection and any payouts are based on the sort of third-party event trigger. So when we're talking about earthquakes, you know, it's the magnitude of the earthquake and the location of that earthquake. Flood, it's sort of the amount of rainfall that's modeled often to rise in a certain location. As in tropical cyclone, we're talking about wind speed. And this, you can compare it to indemnity products, with traditional products where you have car insurance or home insurance, where, you know, you would have an assessor come out, say, okay, you've had a flood in your basement, or you know, the walls of your house have been knocked down, or your car has got an accident. You know, how much are you owed based on my assessment of the amount of damage that's occurred, and based on all the exclusions and other things in your policy. So that process has high administrative costs for indemnity protection, and makes it hard to sometimes reach, the far corners of the earth, and also provide something that's affordable and efficient for a range of buyers. Certainly, it is something that's much needed, indemnity products, and so we are very supportive of more indemnity solutions reaching all parts of the market. But with Parametric, you have the ability to, you don't have to make an assessment, because the payout is purely based on what the measurement of the event. So how fast was the wind speed going in the location of interest based on the modeled result, and you can trigger a payment within days of the event, and that money then can flow to the individual. So you have these pre-agreed terms that make the administrative function much cheaper to provide, and make it much easier to access some of the more remote and underserved communities with these products. But Parametrics are not, by all means, are not sort of a magic bullet. They have they're very good for certain applications, and also that there's lots of potential for what's called basis risk, wherein you buy a policy for $1,000 to protect your greenhouse, and you understood it was built for a category up to category 3, but category 3 storm comes and somehow it knocks it down, and if that's your only protection, and in this case that Brent offered, you might, because you only bought a category 4 and up, you might not get a payout. You would not get a payout because you have not purchased the correct policy ultimately for your asset, if that's what you're trying to protect. So there's lots of situations where without the loss assessment, you might not get the money that you thought you were deserved. And so you have to balance this sort of what's called basis risk of getting too much or too little payment, because it's an independent third-party measurement of an approximation of, perhaps based on your assessment as a client, what you need in the event of these kinds of events happening. So that's something that's really important for any buyer of Parametrics to understand. Is there's lots of efficiencies and it's very attractive, but also there's potential for you not to get the right amount of money from the product, or what you think is the right amount of money. But it's a very flexible product. So I think that's why one of the reasons we focus all our energy on deploying these kind of products. So more to the point of this particular effort in Dominica, Brent was describing this already a bit in his response to Dirk's question. Just to lay it out sort of visually, Global Parametrics and the Natural Disaster Fund, we function here as we built the product and to the design specifications of Creed and the league based on what they were hoping to distribute to their members. And then the league is ultimately, so DCSL stands for Dominica Cooperative Societies League. They're ultimately engaging with their members of the credit unions to sell the product to them, and the platform to administer it through the smart contracting and blockchain system was built by Diagon, and Creed was really the leader with Brent's oversight of sort of conceptualizing and building the infrastructure and bringing the partners together to bring this transaction to market. And Global Parametrics and the Natural Disaster Fund, I think the instrument ultimately that this contract was sold as a derivative between the Natural Disaster Fund and the credit union. Certainly there's ways to write this as as insurance or as reinsurance. In this case, it was deemed most efficient to use a derivative structure for this contract. I'll just run through this quickly. Brent's already talked about the structure, but just thought it'd be helpful to see it visually. So this product is what we call a cat in a box. It's probably the simplest parametric product that one could buy for tropical cyclone. And you see these two boxes here, as described already. There's one is the first box. Box 1 is 25 kilometers radius around the shoreline. And then the box 2 is about 100-kilometer radius. And essentially, as Brent mentioned, there's lots of different sort of payout mechanisms that are just defined based on the policy you choose. But what you're looking at is the path of the eye of the storm, which, where does the eye of the storm go? Does it enter box 2, or does it enter box 1, or does it enter neither of the boxes? And certainly if it enters none of the boxes, then there will be no payout. If it enters box 2, say, and it's of some level of wind speed, you check what policy you purchased, and if that wind speed exceeds what you purchased for, then you get some payout based on the amount that you purchased. And as Brent described, the individuals, there was, I think, the minimum policy was, I think, very, very small. I can't remember what the number was. And the maximum was, I think, I don't remember the maximum number either. But there was a wide range of options that one could purchase, and it was really up to the buyers to think how much cash for the various problems that I might have in the event of the storm, how much cash might I need to address the losses of income, the losses of business operation, the losses of assets, other things that might occur in the event of the storm. So some of the key elements that were important for Global Parametrics to get involved in this program, I think, and helped to sort of drive a successful launch. I think, you know, Creed certainly played a strong role in building a foundation, bringing the partners together, and was very active in the process of creating the concept and really facilitating all the connections that were needed. You know, we as Global Parametrics, we're not in a position to go into a country like Dominica and try to build a program ourselves and try to figure out the best way to distribute something within the local market. We are, you know, a company of about 20 people, you know, based in the US and Europe. So we always work with different kinds of what we call risk aggregators. And I think having the credit unions with DCSL involved, you know, they have, I think, coverage of almost everybody in the island. And so I think their connectivity across the island gives this platform huge potential for high coverage. You know, if the product is deemed to be useful to that community, so that was really attractive for us. And I think for this kind of product, you know, having a parametric product of this nature, or this cat in a box structure serving individuals, can be there is potential for significant basis risk here. But I think because Dominica is a very relatively small island, that gives this, there's you know, a big storm of some high wind speed magnitude is going to have damage pretty universally across the island, in ways that would be, you know, more easily assessed than if you're in a very large area and you have to have a much more refined product. And the more you build, I mean, we have the ability to build much more refined indices, but they get more complicated and harder for the ultimate buyer to understand. And there's a bit less transparency. So that can be a problem if you're selling these parametric products to retail customers. As you get something that gets more complicated and more precise, it's just harder to understand and harder to have confidence in if you're a buyer sometimes. Another point of this, there's this technology component of the smart contracts and the blockchain and the sort of delivery through an app on a phone. I think that was really interesting for us to learn from, to see how distribution might work in that way, because we hadn't worked with those kind of tools before. I think, you know, distribution and selling of these products is challenging, especially since it's a new product and in a new market. So it seems like technology can really facilitate that, but it's not going to be the only solution. I think these are complicated products, and you need people talking to people, explaining what it is, and really finding ways to, I guess, communicate as clearly as possible, and so that people understand what the options are and what the utility of it is. And lastly, I think, you know, this pilot was relatively small. I don't remember the precise numbers of buyers, but it wasn't a huge number of buyers this year. But as Brent said, there was a relatively short period of time for the sale process, because I think they just got approval in mid to late April. But I think that there's a lot of foundations here that give us hope, and we're excited about, you know, how next year could roll out, with lessons learned this year and sort of more people aware of it, and the systems in place to grow the possibility. And certainly the conditions in Dominica are not necessarily unique to the Caribbean. There's I think lots of other risk aggregators out there, and other sort of relative markets that probably have something like the ones that are being focused on here could have real good potential for replicating this program elsewhere. I don't want to take up too much. What's the time here? I had this one little case study. All right, let me just do this last one real quick, and just to give some alternative perspectives, and then I'll stop. So one model that I think is, you know, one of our sort of flagship programs I just wanted to mention here is with a microfinance group called Vision Fund, and I think, you know, this is a program we started a few years ago with them. We initially had protection in 5 countries, and now it's scaled up to 28 countries, and we're protecting them against, you know, 4 different risks: drought, flood, earthquake, and cyclone. But the protection, our client in this case is solely Vision Fund. You know, like it's solely the financial institution. and they're not actually providing a direct product down to their borrowers. What they're doing is protecting their balance sheet as a financial institution, so that in the case of an event, whether that's, last year they're in Honduras, for example. Last year, there were 2 big cyclones that came through Honduras and had major impacts. And so in that market, what they did is ultimately they got some fresh funding into their Honduran institution, and were able to use that to provide what they call recovery loans and restructuring loans to their borrowers. So after the disaster comes, getting new money into those markets so that their borrowers can rebuild, or they get extensions on their loans. They have sort of just a little bit more ability to manage the risk. So this is not a direct retail product in the end to the vision fund borrowers. It's a solution that sits at the institutional level. And I think that the benefits of this are that it can be done quite a bit more cheaply than a direct retail product, because you're combining risk and you're purchasing sort of a more limited policy. The drawbacks are the individuals themselves don't have direct protection. So it's up to the vision fund itself to decide how this product is administered and who gets the recovery loans. But so it's not necessarily a better model, but it's just an alternative model out there that we've worked on as well to give people some other ideas as to how this can be done. So I'll stop there and turn it over to you, Karen.
Thank you so much, Dan. So as usual, we're going to have a little question and answer time. There was a question from Ezekiel about, is there a significant difference between one premium type and another? And I think that's about the actual, when you buy the policy, how that works for them. Would you be able to address that?
Yeah, for sure. I mean, the risk of a tropical storm versus a Category 5 storm is quite different, and certainly the payout amount for a tropical storm and versus a Category 5 it's quite different. So as you move up in that spectrum, yeah, the price is going to be notably different. I can't remember exactly. I mean, Brent may have it top of his head, but I think the price between a Category 5 only protection and Category 5 down to tropical storm, I feel like the price was about double in premium for those. But maybe Brent, you remember more.
Yeah, I think I have the numbers memorized. Yeah, one of the reasons that it became quite interesting for people to buy the comprehensive solution was because the catastrophic only, so coverage only for Category 5 storms was 3 point. Actually, it was about just over 3%, and then to have coverage for Category 4 and 5, it more than doubled, so it went to over 7% for Category 4 and 5. But then the change from Category 4 and 5 up to comprehensive was only a few percentage points. So it went up to just over 11% for, actually just under 12% for the comprehensive coverage. So I think people felt like once you've made the jump to include coverage for 4 and 5, it's just a few points extra to get all the way up to comprehensive. So most people just sort of gravitated towards the comprehensive option.
Okay, thank you. I have another question here. I don't know if Dan or Brent will be able, or even Victoria might be able to answer this. What is the difference between traditional insurance and the parametric insurance that we've been talking about?
I'm happy to go briefly, but obviously for Dan to complement. So if we think about traditional insurance or indemnity insurance, right, the way that the contract is sort of structured is that you insure an asset, right? It could be your car, motor vehicle insurance, whatever. And in the event of a storm or something else, and you incur a damage to your car, right? You basically have to record your damage. You have to report your damage to your insurer. Then the insurer has to assess the damage. And then based on that, loss assessment is what it's called, the insurer makes a payout. That's indemnity insurance. And that loss handling or claims handling process at the end often takes a lot of time, especially in countries where we don't have a very, let's say, super sophisticated insurance market infrastructure, right? And often what we see is that in the aftermath of natural hazards specifically, it's very, very helpful for those affected to have quick liquidity, right? To have cash within 1 or 2 weeks or even beforehand to address the damage as they occur. Now, when we talk about parametric insurance, this entire process of assessing the actual loss at the end after the damage has occurred is taken away. The way that parametric insurance works is that the payout, your expected payout, is basically defined based or in linkage to pre-agreed parameters, right? So for example, what Dan and Brent explained, a certain wind speed, right? A certain amount of rainfall over a period of time. And that wind speed, that rainfall is in advance associated with a certain payout amount that you would receive that doesn't necessarily compensate you directly for the loss, but rather tries and address your liquidity needs that you have after disaster. And then instead of having to report your damage, what happens is once wind hits a certain wind speed, right? Once rain hits a certain amount of rainfall, the trigger, the parametric trigger, the parameter is surpassed, and then automatically the payout sort of kicks in. And ideally, policyholders receive their payouts within 1 or 2 weeks after the event. That's parametric insurance in general. I'm sure there may be difference with regards to what Dan and Brent have been presenting on, but Dan, maybe you want to add and sort of contextualize with the policy that you've just presented, or Brent?
I feel like we've maybe talked at it in 3 different directions already, so maybe leave for more. I don't think I have more to add, but thanks, Victoria. That was really helpful.
All right, thank you so much. And then there's another question. What data source is being used for the wind speed, and can the clients verify this within the app?
So Brent can answer the app question. I think the way that the wind speed source is the NOAA, the U.S. National Hurricane Center's official publicly available data on the storm location and storm wind speed. Basically, that if someone really wanted to figure it out, the data is all up there publicly, and you can see the location and the track storm. I mean, to understand precisely what the amount is within the box at the maximum level, that takes a little bit of additional calculation, but the vast majority of it is publicly available. So Global Parametrics' role is to download that data, convert it into the official results, and then pass it through to the API that then the app ingests and turns into a payout indication or no payout indication, I guess. Brent, I don't know if you want to add to that in any form.
Yeah, not much more to add. I think I would simply say that right now, in terms of the notifications that individuals will receive, there won't really be so much programmatic intervention. It will mostly be sort of ex-app communications that individuals receive until that final event is written to the blockchain, and then they will be notified through the app that way. But eventually there will be programmatic communications that go along with the notification of an event, and then the process that Dan just described will be reflected in the app. But for the moment, we will record an event in the blockchain and an app notification when the actual event has been formally recorded.
Okay, thank you. We have one more question.
If I might just add one quick point on that. I think this level of the data source, this is a very important question around parametric products, because I think this is probably the simplest index we could have designed for this risk. And I think as I mentioned, there's lots of interest for various clients, especially the more sophisticated ones, in building a more refined, more precise view of what's the actual wind speed at the location and how much damage it precisely will have to your building, for example. And that can be done, but when we do that, it's very hard to trace all the calculations and for the client to actually understand how we get from point A to point B between event and index. So just in thinking about parametrics, there's this balance between complexity and simplicity and transparency that we always have to manage to get a good product that can be understood and trusted by a client ultimately. So.
Thank you. Final question before we move on to Phoenix is how and when this product is going to be introduced to Antigua. So I guess the question is, are you all looking to expand the market space? Because I know right now this product is only in Dominica.
Yeah, so I guess probably myself, Global Parametrics would be the one to answer best on this, because we're global and in our operations and certainly focused primarily on low and middle income countries. So we're happy to work on a solution in Antigua. I think the only issue is as in Dominica, we need a partner, a local partner of some kind to build that. We aren't going to be in a position to, go into the country and sort of figure that out. But if there is an eager institution or local entity that would like to work with us, we're happy to think about a collaboration similar ways that with the cooperative league of Dominica and other markets that we've worked in. So feel free to reach out. We can chat if there's a willing institution.
Great. And now we're going to hand over to Phoenix from the Dominica Cooperative League.
Okay, yes, hi, pleasant good morning. Can you hear me?
Yes, we can hear you.
Okay, thank you very much. I've just been on a really fantastic moment for us. We're excited that, okay, 1 second.
You're on mute now.
Oh, yes, can you hear me now?
Yes.
Okay, great. Yes, thank you. We're excited and we're happy about this partnership with CREED and with Global Parametrics. As Brent said earlier, this has been something about 2+ years in the making. I remember us having a conversation immediately post Hurricane Maria. And you would remember that Hurricane Maria decimated the agricultural sector in Dominica, causing damages in excess of 226% of our GDP. And of course, that came on the heels of the damages of Tropical Storm Erika, with over 90% damage to, in terms of damages, 90% of our GDP in 2015. So for a small island jurisdiction like Dominica to haven't passed through 2 major disasters and to be able to bounce back better really is a testament to not only the resilience of the people, but also the need for us to build resilience in the critical sectors of the economy. And so we began this conversation because at that point in time, the government was signaling its intention to pursue this national resiliency project where Dominica would become the world's first climate resilient country. And as a result of that, we sat down, myself and Brent, and we said, listen, how can we put up a product out there that would help, particularly so in the disadvantaged sectors? And one of the critical things that came back on the heels of the passage of Hurricane Maria is how well the insurance sector responded to the dire need of the people to rebuild and to reconstruct. And what we found happening is that because of the large gap, in fact, there were months before somebody even got paid. And we were saying, listen, in the aftermath of a natural disaster, the first thing that people need is food and health supply. Then they need a place to cover, and then they need to now begin to slowly rebuild this sector. And what we wanted to do is, listen, insurance was always going to take a while because you have to fly in the adjusters. They came, they adjust, and then some people at that point in time were informed that they were either underinsured or not adequately insured and so forth. So we wanted to kind of have a stopgap measure, something that would fill that void until they would have been able to make their claims and get paid on the insurance. And then we look at it, and then we also look at the case of which is the most critical sector in Dominica that is almost always guaranteed to be impacted in the passage of a natural disaster. And that is the agricultural sector. And that is what brought about this whole thing about the parametric insurance and how do we have this kind of flexible hurricane protection program. But again, it was uncharted territory. And again, congratulations to in a huge part to Brent and his team at CREED, the CEO of CREED, and Brent and all of the folks, the lovely folks at CREED, and also the government for giving their support behind this initiative, because it has been an arduous road. It has been a long road in getting here. Remember, this is something that has not been done in our region. Most of the times we speak about parametric insurance is at the level of the organization and at the level of the country, but never has it within this region brought to the the micro mesmo level, where you have individuals can actually, because normally parametric insurance is very expensive undertaking. So this is uncharted territory. And as a result, we did a lot of studies, we did a lot of outreaches to the different villages. For the pilot, for the 6 of this pilot, we're using 2 of our affiliate credit union to be part of this pilot. And so people were able to go into these credit unions and get it. One of the things that we have found to be interesting is the fact how important that education is as part of this thing, because people never knew. I mean, you would have watched on Netflix about investments and derivatives and all of that. And so in this part of the world, it's kind of like a novel idea. People didn't know what a derivative meant, and they always compared to insurance. And we had to be constantly explaining that this thing is not asset tied, and what's the difference between your traditional insurance and the derivative, which is the flexible hurricane protection program. So we had to go on a significant education drive so that people can understand, first and foremost, the difference, understand the model in terms of how the claims are made, how the payments are made, how do we assess the damages and all of those things. And we basically went on an education drive from 0 to 100. And I think that played a significant role in the selling of the product. But again, our focus, although we managed to sell quite a few products, quite a few policies, our focus was really bent on laying that platform for us to be able to now build on it for the consecutive years. Dominica, the OACS, we've spent considerable time. In fact, half of the year we're under hurricane watch. So we know that this time is going to come around again. So we've garnered a lot of the user stories, the use cases, and we've seen how is it that we can now take those impressions and feedback that we've received from the users, both in terms of the design of the platform, design of the application, in terms of the education drive, driving sensitivity within the market space. All of these things were taken back to the drawing board for the next season and see how we can model this in an even more customer-friendly way that reduces the tension and the gaps and allow people to understand the product better. And I imagine it is our hope that once we've passed through the season and we're knocking on wood that nothing happens. In fact, somebody came to us and said, well, this is one season they can't wait for hurricane to pass because they'll get paid. But we're saying it's not for us to go on a prayer storm to make things happen. But we're happy that should anything happen, that they have a safety net there for which they can fall back on. And this brings us to the second part of the equation, which is the mobile wallet, M-L'Argent. And M-L'Argent is a subsidiary company. M-L'Argent Mobile Financial Technology Services Limited is a subsidiary company of the Dominica Cooperative Societies League. And we are the DCSL. We are the apex body for cooperatives in Dominica. We've been in existence for over 64 years. And we're happy to bring M-L'Argent. M-L'Argent, it's a financial technology platform that is going to be leveraged for small businesses, for the disadvantaged, for mom and pop shops, for agriculture, for farmers, for fisher folks, for minibus drivers, for the folks who are vending on the side of the road, for large corporate entities. This is really a financial solution that is truly inclusive. And in fact, we've made it so inclusive that we've made onboarding process very, very simple. And as a result now, for example, for the persons who will be getting payment once the payments are to be made in the event that there's a passage, they will receive their money instantly via the mobile wallet. And signing up is very seamless. You can go on the M-L'Argent, MLAJAN.com website, and you can see a whole host of information there on the wallet. And payments are made in a matter of seconds. So once the payments are released, everybody will get an opportunity to get it very quickly. So we're happy, we're enthralled about the partnership with Global Parametrics. Thank you, Global Parametrics. Thank you, Dan, for believing in the project. I mean, when we were in the market looking for a partner, we could not have asked for a better partner than Dan and the folks at Global Parametrics, who actually believed in the fact that we can make history even in a small little jurisdiction like Dominica. So we're really excited, we're really happy about the prospects of this flexible hurricane protection program. And it is made on the grounds that it can be scalable to the other region. I noticed somebody commented, when will this come to the other countries? It is a scalable product that can reach out. Again, Brent talked about the regulatory environment and how we had to grandfather the process to the regulator, because of course it is something new. Somebody mentioned about the poor, making it available to the poor. And one of the things we've reached out again to our credit union partners who, for example, some of the folks wanted the policy, but they don't have the money to pay up front. And we've spoken to some of our credit union partners to see how they can provide a loan facility that they can be able to just take a loan facility where they can pay it out in tranches or in installments, but they can now be able to benefit from the full payment of flexible hurricane protection. So it has been an incredible journey. I know definitely a harder one for Brent and the folks at Creed who have been at it day and night, but it's a learning curve. It's a learning experience for us. It is another tick in the box as it relates to financial inclusion and financial access. And how do we can we craft innovative technological products to help those who are disadvantaged or who are disadvantaged? And so really significant moment in our history for Dominica and the OECS by extension. As I mentioned, the payouts can be made directly to the credit union accounts and can also be made directly to the M-L'Argent account. And by the way, the M-L'Argent account will be integrated with the credit union account. So once you receive payment on your M-L'Argent, you can move it to your credit union account. Or if you're in the credit union, you can move it to your M-L'Argent account seamlessly. So again, incredible journey. And thank you for all of the folks that have helped us along to the process. Thank you for the Cpdc who've also given their critical input at a specific junction of the equation. Thank you very much.
Thank you so much. Thank you for tying together all three presentations and letting us know how it's working on the ground. And that's one thing Cpdc loves to know and loves to share about. I do have one question. From the time of inception of this project to the time that you actually had the pilot this year, what was that time frame?
Well, we actually had a large part of the entire process related not necessarily to the design, but actually grandfathering the product through the regulatory process, because this is something that is unheard of in our jurisdiction, and the regulators, as the custodians for the sector, needed to ensure that all the necessary ingredients are there to protect the end user, protect the system, and all of that. So we have a lot of regulations that we needed to ensure that we're in compliance with, those areas that we needed to get exemptions for. And then we also needed to satisfy in terms of the processes, how people are going to actually claim, how they are going to be informed, how is the education process going to be rolled out, so that the end user is not any worse off as a result of this. And the thing about it is it's important. And because we realized that we are sowing the seeds for future development, there wasn't a rush on our side to push through the process quickly, because we wanted the end users to be fully cognizant of what is it that they are purchasing, to understand how is it going to impact them, how they're going to be paid, understand the product in its entirety. So we've done quite a few public presentations on social media, on the website. We've done a lot of forums, we've done outreaches in the villages. And so hopefully next year, we can now expand that beyond not only credit union membership, but also those persons who do not have credit union membership. And as I mentioned earlier, the M-L'Argent wallet is an inclusive solution. If you have credit union membership, you can also download. If you don't have membership at any financial institution whatsoever, you can still download the application and use it. So regardless of where you are in terms of the financial inclusion ladder, you can be part of this solution. And that is why the FHP is so significant. And we've spoken to some of the users, those who have bought the policies, and even those who have not bought the policy. In fact, people came after the cutoff date and say, you know, I really wanted to buy this policy and I didn't understand. We understand, because again, Rome wasn't built in a day, and because we're sowing for the future, we wanted everybody, and we wanted Dominica to understand what is what is the derivative all about, what is parametric insurance all about, what is the FHP all about, and to tie it all in, as you said, I tied it, but to tie it all in terms of the mandate of CREED, which really was the grandfather in this whole scheme of things in rolling out and completing one of the critical points of its mandate in terms of delivering climate resilience to Dominica.
Okay. So if I wanted to do this in Barbados, you would say that, I mean, it's going to be different, but it took like 2 years before, with all of that wake up before you launched in April?
No,
or was
actually not. That's the benefit of technology and fintechs. We have done all the hard work, so we don't have to develop a new solution. It's just a matter of now scaling it to the OECS countries. So on the technical side, I would probably say maybe about 3 to 6 months or so. But the large part of it, again, like I said, we've done all the legwork. The product is there. It's just a matter of now open it out to other jurisdictions to be able to sign in. And it's 100% in the cloud. So we wanted to, in the case of scaling to the region, it's just a matter of making a few changes on the technical side. But the largest part of it, the brunt of it, is really in the education. We cannot overemphasize how critically important it is to educate the people on what is it that it's all about, what is it that it's all about, how they will benefit from it, and how it is not a substitute for your traditional insurance. Because we didn't want people to go just dumping their home insurance, and he said, no. Somebody turned and asked us, said, but this is, why do I bet on or hedge on a natural disaster coming? And I asked the question, I said, you're mandated every year to take out a driver's, your car insurance, yeah? And whether you get into an accident or not, you still have to take it out every year. So yeah. It is the same thing, except that this is not mandatory, but you're hedging against something happen. So if it does happen, you're covered. And if it doesn't happen, then hooray. But our intention and our prayers definitely is not for hurricane to be happening every year so that we can sell more product, But we want the people to understand what the derivative is all about. And I think Brent and his team have done a fantastic job that we're happy to be partnering with CREED on this initiative. And we will continue to look at other avenues that we can bring this to a larger scale in Dominica and in the wider OECS.
Great. I have another question, but let me go to the questions in the chat before I raise my
No problem. Yes.
How does this initiative interface with CRIF?
Okay, well, that's a question that Brent can answer because he's been dealing with the on the strategic side. So Brent, if you want to take that one.
Yeah, sure. So CRIF is really the sort of the pioneers for parametric insurance in the region. They sell policies really at what you would call the macro level. So it's governments in the region that buy policies from CRIF. Our product is really a micro level policy. So we sell directly at the retail level, directly to individuals. There's obviously some overlap. So if the government of Dominica, for instance, subscribes to CRIF, they have a policy through CRIF. In the event of a payout, the government will make determinations in terms of how they use the proceeds. What this product does is it allows individuals direct control over the payouts, and they decide how much protection they want and the coverage that they want. So there's not really any sort of alignment. There's no competition between the two products. CRIF very specifically provides coverage at the sovereign level. This is very much a retail level product.
Okay, thank you. Has any thought been given to taking a regional approach to spread the risk, partnering with a regional company?
Well, so so in terms of spreading the risk, that's very much where Global Parametrics come in. They're a global company, so they spread the risk around. They underwrite tropical cyclones in the Pacific. They underwrite drought in Africa. They underwrite tropical cyclones in the Caribbean. So they take responsibility for managing their risk exposure to make sure that it's balanced, and that's their expertise, and that's how they do this. So we wouldn't take a regional approach. A regional approach for tropical cyclones really isn't even sufficient, because Maria, for instance, really pretty much cut a swath across the entire region. So what you need is really a global approach to managing risk.
Okay, great. Another question.
And just to add to that, you see, what is also important is that in the event of managing risk, and there's a popular refrain that goes like, spread risk is lower risk. So it is important for this to be a scalable solution, and that's why we've partnered with an entity such as Global Parametrics that have all of the requisite statistical knowledge and models that they can craft up policies such as this. It's just that simple, put it a markup and putting it in there. There's quite a bit that went into the backstream of crafting the product, crafting it based on risk, crafting it based on exposure, crafting it based on the data that we would have provided to them, market data, market analysis, and so forth. So it's quite a few econometrics studies and findings being put in there into this simple solution that we can now today appreciate as FHP.
Thank you for adding that. Considering that the developed countries are responsible for the most greenhouse gas emissions, therefore responsible for the global warming and climate change, is there any contributions from the Global Climate Fund to reduce the cost of premiums to clients within our region?
Well, I think I can let Brent take a take, but I'll just take a stab at it early. One of the things that, every time we begin this discussion, there is always, the conversations will always come up again about greenhouse gas emitters and who's responsible and who should be paying the tab and so forth. But again, not to defend anyone, but from our vantage point, we've looked at it and we've looked at ourselves as a small jurisdiction. And we've said, listen, we cannot depend until anybody develops the level of consciousness to be able to come in and help us. We need to do something about our situation now. And as you would have seen, Hurricane Maria, what it did to Dominica, I mean, we were grateful for some of the support that we received from our international partners, but the resilience and the level to which we were able to build back had a large part to play based on national intervention and the public and private sector intervention. So yes, while we would appreciate and we would welcome any level of global consciousness regarding greenhouse gas emissions and who can support, we believe that the onus was upon us to start something, even though at a small level, something that has not been done before, and that once we can make it a success, then we should be in a position to now say, listen, we are presenting to you a model that is scalable. We're presenting to you a model that is accessible, tried and tested already. How can you partner with us to ensure that this now becomes a regional thing? That everybody in Dominica, Barbados, and Jamaica, within the entire jurisdiction, the OECS and the Caribbean, and even some of our countries within the ACP area, or the disadvantaged countries, they can also benefit from.
Okay, great. I think Victoria wants to also take a stab at this question.
Yeah, I can briefly add in terms of where the conversations, the global conversations on, let's say, premium support stand, right? So with regards to the InsuResilience Global Partnership that we mentioned at the beginning, that partnership is governed by a high-level consultative group made up of G20 plus countries, V20 countries, private sector, academia. And I think 2 weeks ago, they had the first really global discussion on the issue of premium support and a sort of finding a more transparent and accountable way of channeling premium support to where it's needed, namely those countries that haven't contributed, right, to climate change or have the least contributed to climate change. And one vehicle that is being looked at is within the World Bank, the Global Risk Insurance Facility, I believe, GRIF, but that one is very much focused on the sovereign level, something that the B20 countries as well as other actors in the high-level consultative group are trying to push, is to also consider premium support for micro and meso insurance instruments, such as the one that we heard here today. But Phoenix also made a very important point when it comes to taking the first step in the countries, doing, I think, or developing the solutions that you think are needed. And also when we talk about the design of premium support, we need smart ways for premium support, right? Premium shouldn't be supported 100% if possible, to keep some incentive to reduce your risk, right, at the policy holder. But we are hoping that we are working towards some form of global consensus over the course of this year. Of course, you all know global policy is slow at times. And it may also be useful for you to know that the G7 foreign ministers in May put out a declaration specifically asking the InsuResilience Secretariat for principles on disaster risk finance, and premium support is supposed to play a role in that. So I hope we can see something coming forward around this over the next year. Thanks, Karen.
Thank you for that contribution. We have another question. We have 3 more questions and then we wrap up the session. How many policy holders do you have to date?
Yeah, I'll take that one. So we had a very limited sales period. This is intended to be a pilot. As I mentioned, our objectives of the pilot were, first of all, to make sure that everyone who bought the product really understood it, because this is a new financial class of product. Second of all, we wanted to make sure that we managed our exposure in terms of the complexity of rolling this out using a new technology platform. Third of all, we had very specific constraints placed on us by the regulator to sell in 2 jurisdictions. So we sold under 50 policies for pilot. We weren't really driven by a metric that said that the number was the important thing. We were driven by really making sure that we managed the risk, we communicated this effectively, and that we established a solid foundation for rolling out the sale of more parametric insurance to individuals in the future. A bad pilot that poisoned the well was what we were really wanting to avoid. We wanted to make sure that this was handled well, so that it established a good foundation for the region for retail level sales of parametric insurance products.
Thank you.
I saw one other question. Do you mind if I, Karen, in the chat, there's a question about reaching out to lowest income groups, poor and lowest income groups. I think it's a good question. It's worth speaking to. We did hold focus groups that were facilitated by the 2 credit unions and the 2 pilot groups. When we selected the focus groups, when we selected individuals for the focus groups, we took a sampling of their membership, which was representative of their membership by age, by account balance, and by gender. So we divided them up basically into 3 different groups for account balance, 3 different groups for age, and then we subdivided those by gender, so that we made sure that we were getting a representative sample of their membership to come to the focus groups. So we were very intentional about that, to make sure that we weren't just taking the people who show up at every credit union meeting. We wanted to make sure that we were getting the perspective of people who really might not have been approached previously. I would also say that the very first policy that we sold was to a gentleman who was a very smallhold farmer and really wanted very nearly the minimum amount of coverage that we offer. The smallest policy was for 200 US, so just over 500 EC. So we really did have expressions of interest from people in lower income groups.
And also important to add, Brent, that you mentioned earlier that the focus was not necessarily on the numbers, and I think it's critically important that we underscore how important this was, because of the fact that of its newness. We wanted to ensure there are quite a few persons that came by that was interested, and they wanted to be part of the exercise. Some of them applied too late, and of course we had a cutoff period. So we basically had about 3 weeks of selling time, I should say, a 3-week window before we cut off. But for the next cycle, we'll have a full 6 months to go, and with, of course, this basis to build upon.
Okay, thank you so much for that. And I believe the question about the payouts were answered already, that how it works with the mobile wallet. So the final question is, how do you encourage persons to adopt or to purchase this insurance? Because like, as you said, they already have traditional insurance. And now you're asking them in the time of COVID with all these shutdowns to have a new expense of having parametric insurance.
Well, we don't. I will allow the expert Brent to delve into it, but I'll take a quick start. We don't see it as expense. We see it as an investment. Because if you look at it, I think the payments are just less than 15% of the payout. So it's another avenue for you to cover yourself and to provide a greater financial backing for you, a greater financial backing for you in the time of a natural disaster. So we don't see it quite as an expense. In fact, the persons that have bought it, some of them did not even have credit union membership. And again, the pilot was carefully controlled. So you had to have been a member of the 2 credit unions, which ironically are not located in the most densely populated areas. They're mostly in the agricultural belt. So you had to have been a member of those credit unions to be able to purchase, which was another sort of hindrance. But again, it was a carefully driven, led onboarding process for those persons. So for us, it was not just about the numbers; it was about getting them to understand it. And those that have purchased the policies, none of them spoke about the expense. Most of them spoke about they were happy, so much so that they wanted a sum to pass within that box, the box 1. They wanted the sum. So when we did the demonstration and we showed them the different areas geographically, how if they're impacted, what the payouts would be, they'll be excited, eyes lit up. But the important thing was to get them, Karen, to understand the product, get them to understand the initiative. And I think because of our insistence on them understanding it, because again, this was one of the regulatory conditions, the education drive, the outreaches. I think because of that, most persons said from the time we open for the next season, they will be on board. So we can expect a large fall increase to happen the next time we go around.
If I can just add quickly to what Phoenix has said, I think there were really 2 important aspects that I wanted to emphasize. First of all, yes, we are just coming out of a period of decreased economic activity as a result of COVID, but that is an unrelated event relative to climate risk. So those risks have not changed. We don't live in a world where we can disaggregate our risks like that, unfortunately. The risks from climate change are still very much there. So people have to think about these things separately. You have to assess and adjudicate your risks independently of each other, and the risks from climate change remain quite real. And people did get that. So people understood that they had to make assessments about what they think the likely impact would be for them and make an informed decision. So that's one point I think that's quite important to make. The second is that in actual fact, when people did evaluate their risks, as I said previously, by and large, people chose the most expensive option, which was, again, that was counterintuitive. I would have expected that we would not have seen that level of interest in the comprehensive option, because as people looked at the risk, they said that they wanted to be covered for the full range of events.
Thank you. And Victoria?
Yeah, thanks. I just want to add or emphasize a point that Phoenix made, right? I think the key is really to consider insurance not as an expense, but as an investment, right? For one, you're investing in security, but what may also happen, and I'm sure Phoenix may have more to say on that, is that by taking out insurance, right, you as a policyholder, especially if you're, for example, a business, right, you're also creating some form of certainty that you will be able to continue to operate even in the case of a hazard, because you will have the resources to repair, which would also make you theoretically, in the eyes of a credit provider, right, a more, let's say, reliable debtor, and would enhance the access of businesses, for example, to credit, right, which they can then use to invest in expanding business opportunities, expanding income generating activities, and therefore also over time basically grow. So as I said, I think the key point, or one of the key points that Phoenix mentioned, is really the investment side of things, and that we have to shift towards a perception where insurance really is an investment. And I also think what Phoenix mentioned may be very helpful for you, Karen, Cpdc, and your partners working in the context of the maps, is to understand the approach that they took, or to learn from that in terms of better explaining risk, explaining the need for insurance, making it visible, is something I think that we all need across the board. And thanks. Don't know whether Phoenix may want to add something.
Yeah. If I could just pop in, because Karen, I'm gonna have to hop off into another forum in a few minutes.
Yeah, we're wrapping up. Sorry, you're on mute, Phoenix.
Can you hear me?
Yes, I can hear you now. Yes.
Yeah, sorry about that. Somebody asked the question about what are the key challenges that we encounter during the process. And as Victoria was saying earlier, for us, the biggest thing has been the perception. Remember, we came from Hurricane Maria, where people were purchasing insurance for years, 20, 30 plus years, and they never had a disaster on this scale. And then all of a sudden, some of them would have retired. So they would have, some of them would have stopped paying mortgages, which offered a kind of compulsory insurance cover. And then they would have retired, they would have paid off their homes, and they were sitting in there, and boom, Hurricane Maria came and everything, and they have no gap, no financial cushion to rebuild, because they would have stopped paying the insurance because it was no longer mandatory for them as part of the mortgage cover. And then now they have no way, until now, some of them have not rebuilt. But then additionally, some of the persons who would have had insurance still had to wait months, because even the insurance companies would have not have a natural disaster in such a scale that massive payouts would have to be made in such a short space of time, with everybody clamoring for help all across. We had on average 18,000 homes that were damaged as a result of Hurricane Maria. So you can imagine, for a small jurisdiction like ours, to rebuild all of the critical infrastructure, the homes, the utility systems and all of that, and to ensure that people have their livelihood restored in such a short space of time is nothing short of phenomenal. And that is why for us, the FHP became so critical as a part of in building the resilience. And that is why we were extremely patient in the undertaking, because for us, the biggest thing we had to change was that perception, because showing that some of them waited months to get paid out, and like, okay, so when are we going to get paid now on this thing? Yeah. And because our policy says within a matter of days you're going to get paid, it was really a significant break from the traditional insurance payout that they have been accustomed to. So the greatest thing for us was the perception, the conception of what an insurance product is, understanding what a derivative is, and understanding how is it that the model, because people say, okay, oh, you're betting on insurance, how is this done? What triggers, how do we know that we can get a payout? And we have to tell them, okay, not because you feel a strong wind, know that money is coming. That's not the money win. It has to fall within the box. It has to fall within the payout scheme. So we had the metrics and the full charts, and Brent did a fantastic job laying it out so the average person can understand how they will be impacted, when they will be paid, how they'll be paid, and how they can become part of the system.
Thank you so much. And thank you, Brent, as well, and Victoria and Dan. Thank you, everyone, for being here and for having this vibrant discussion with us. And we look forward to hearing your feedback on your thoughts on the discussion in the evaluation form that's shared in the chat. And we'll be emailing you all the recording of this roundtable discussion as well. Thank you, everyone, and continue to have an excellent day. And I was honored to share this morning with you.
Thank you all.